before we talk about the investment highlights of the company, just let me take you through the investment scenario and the macroeconomy that we are having currently, and how is it kind of favoring ICICI Securities. So we have a macroeconomic, favorable, strong macroeconomic conditions and favorable demographics in India currently. Like high growth economy, we are one of the top growing economy in the world. We have a low interest rate scenario right now. The inflation is stable. On the demographic side, we have a very young population, a median age of around 28 years. We Indians have a very high saving culture as compared to rest of the world. So I think on the back of these macroeconomic trends, there are two mega trends which are kind of developing. Which is changing the savings environment in India, and other is digitalization of the transactions which are happening. So in the saving environment, what we have clearly seen is the one key trend is formalization of economy. So we have seen government take a lot of initiatives in this regard, because of which a lot of economy which was under informal sector is coming under formal sector. There have been initiatives like GST, Aadhaar, demonetization, etc. We have seen a financialization of savings which are happening. Basically, the financial savings now form 40% of the total savings, which was earlier led by physical assets like gold, land, etc. Third important trend that we are seeing is equitization of savings. So incrementally, whatever money is getting invested, majority of that money or a large portion of that money is getting invested in products which are related to equity market, like direct equity, mutual funds, life insurance products, etc. So here we are seeing that a clear growth of from 2.7% in the last 2 years. These incremental numbers are now contributing around 10% of the total numbers. So on the digital side, we are seeing that currently around 1/3 of the Indian population has access to smartphones, which we expect over the next 3 to 4 years to increase to 2/3 of the population. The data being extremely cheap in India is also one of the key reasons here. So this clearly is a trend which is going to help. Both these trends are clearly going to help ICICI Securities. We being one of the pioneers of India's e-brokerage industry business, we were the first one to come out with 3-in-1 offering, which involves trading account, which is integrated with the ICICI Bank account and ICICI Bank Demat account. So over the years, we have demonstrated very strong growth with consistent leadership. We are an established brand with a large customer base, which is built over last 18 years. So it is a franchisee which is very difficult to replicate. We are a retail-focused franchisee, which is again one of thing which is difficult to build, because it is built over 17, 18 years and a large base of customers. So on the market share side, we contribute to 9.1% of the average daily turnover of the exchanges. On the financial side, in the FY17, we have clocked a top line number of around 1,404 crores and a bottom line number of 338 crores. So we are the largest equity broker in India, and that too on a retail-focused technology platform. Largest in terms of both active clients that we have, and also in terms of total revenue share we have of the market. We are powered by our proprietary technology platform, which is ICICIdirect.com. This is a platform which we have in-house built, and we maintain this platform in-house. So the advantage it offers us being in-house is that from the conceptualization to the delivery of the products, the time is much quicker for us as compared to the market, where market largely relies on products which are provided by third-party product providers. Because of this, we are able to have a superior customer experience through product and technology innovations. As we go further into the presentation, you will see every year we have been able to launch a new product or a new innovation for our customers. We have been building a diversified revenue portfolio supported by strong and growing distribution business. Given the fact that direct equity business is a pro-cyclical business, we have invested a lot of our energies and manpower into developing a non-brokerage business, which forms a very significant part of our total business now. Almost one-third of the business comes from non-brokerage revenue. We have a leading institutional platform which caters to one of the largest investment bank in India. We are ranked consistently amongst the top 5 in terms of number of deals and the value of deals in India. We are backed by very strong financial performance with significant operating leverage. As the revenue have grown at a CAGR of around 18 to 19%, our net profits have grown at a much faster rate, which is a clear indication that we have been able to leverage on our digital presence and ability to take on more transactions. Last but not the least, we have a very experienced senior management team which has been with the company or with the group for a long period, largely more than 15 years, most of them. This actually helps us because most of the team has been through a lot of cycles of the market as well. So as we drill into each one of these points, we are the largest broker in India, supported by significant retail business. Our active client base has consistently grown over the years. Currently, we have 0.8 million active customers on NSE. We have demonstrated faster than market growth, while the ADTO, average daily turnover of the market, has grown at around 37-38%. We have clocked a growth of close to 60% on the average daily turnover. As I mentioned, we are the largest equity broker in India by brokerage revenue since 2014. In fact, the number of active clients, we are ahead by our next best by almost 60% on this particular parameter. We have a significant coverage in terms of research coverage of companies as well. Our research team covers more than 230 companies in different sectors. And one important thing that I want to highlight here is the proportion of retail business from the brokerage business. We have 90% of our brokerage business comes from retail, which comes across these 0.8 million customers also which are present on the NSE platform. As I mentioned here, we have a unique offering of 3-in-1 account, which is integrated seamlessly with bank, demat, and the trading account. So credit of funds, credit of securities is extremely seamless experience for the customer. Unlike with a lot of brokerage houses, you will have to keep funds with the broker. Here, the funds lie with your own savings bank account. It is at your disposal. It keeps on earning you savings interest. As against, if you keep it with a brokerage, you don't earn interest on that. It gives us a lot of flexibility in terms of being able to credit the monies and the shares instantly after we get the credit from the exchanges. So you'll find that the payouts for our clients happen within 5 minutes of we receiving it from the exchange, almost. So in the morning itself, the payout happens, which is also a very unique proposition, I must say. On the platform side, we have a very robust platform. At a peak, we have handled 1.9 million transactions, and these 1.9 million transactions makes us amongst the top, not only in India, but also globally. These are numbers which are comparable to our global peers as well. And the philosophy that we have is once we reach 70% of our capacity utilization, we immediately look to upgrade this facility so that our customer experience is seamless experience, even though there is larger participation in the market. On the NSE data, you'll find that 2.5% of the NSE transactions are routed through the mobile platform. In our case, if you look at the equity transactions, 20% of our equity transactions happen through the mobile platform. Distributor, non-banking distributor in India. We have a AUM of closer to 30,000 crores, which has been bought by our customers through us. We offer 2,500 plus mutual fund schemes. And while the industry AUM has grown at something around 27-28%, here as well we have been able to show leading growth by around 37%. So this has resulted in a higher market share gain as well for us. We distribute insurance for ICICI Prudential Life Insurance Company and other third-party products. So we have a long tail of third-party products we distribute, able to grow this business on basis of getting more customers into a mutual fund fold and fees. So the numbers on our SIP front have grown from 3 lakhs to 6 lakhs over the last 4 years. SIP obviously is a more stickier flow in the market, which does not get apart from the platform we have a nationwide distribution network, We have 200 plus branches of our own in 75 plus cities. We also operate through 2600 of ICICI Bank branches, where we closely interact or closely work together on the client acquisition side, because two accounts are also of ICICI and ICICI Prudential Mutual Fund as well. On the institutional platform, on the equity capital market side, we are one of the leading ECM investment bank in India. We consistently have been ranked in the top in terms of number of applications we are able to generate for IPOs. Over the last 5 years, we have been able to get more than 5 million applications in IPOs. We consistently rank number one within a top 3 in terms of our ability to generate applications for every new offering which comes up in the market. Plus empaneled global funds who operate through us. We have branch offices outside India which cater to our FII clients. We have a dedicated sales teams in both Asia Pacific and United States. In fact, we have, apart from retail research team, we have also an institutional research team which caters to these institutional clients. On the financial performance side, all of these strengths have resulted into a strong financial performance over last year, and we have grown at the top line has grown at a CAGR of 18.8%. The cost to income ratio, because of our ability to leverage on the digital platform, has been on a decline, if you see, from 84.6% to 54.4%. Because of this, we are consistently able to maintain a return on equity of 30% plus, and 30% is just at the bottom end of the band. It has been far higher than that. 30% has been in the worst of the times. Since we don't require too much of money for our growth, we have been able to pass most of this money in form of dividend to our investor. This is the senior management team of ICICI Securities. Ms. Shilpa Kumar has been is the managing director and CEO of the company, has been with the company been with the group for more than 27 years. So which gives a lot of stability. Key strategies for growth that we have. We already have a leadership position in most of the businesses we operate. On the equity side, we intend to further enhance this leadership position by focusing on offering more products, more innovations to our customer. We continue to invest in technology and innovation. We continue to offer a platform which is fast, seamless, and secure in terms of experience to the customer. On the financial distribution side, we believe that we have a large opportunity still available to us in terms of our captive customer, and we further plan to enhance our ability to cross-sell to this segment of our captive customers. So we can go to the same set of customers with different product offering from time to time. On this particular question, what I would suggest is look at the market, how the market is structured. If you look at the market, 92% of the turnover comes from derivatives, and 8% comes from equity. Now we have a large retail customer base with us, and this 92% of the turnover which comes from derivatives is contributed by very few customers. The large number of customers participate in equity. We being a more retail-focused company, our share of this 92 to 8 is better in favor of equity. So on equity side, what customers require is not only lower brokerage. They require guidance, they require research, unbiased research, so that they can make their investment decisions. So I think on that side, equity side, we have very attractive brokerage offerings for customers, like advanced brokerage schemes, etc., where customers can pay upfront and enjoy far reduced rates, and they can this advance that they give is available to them for lifetime. It is not that it expires after a while. So on the equity side, we are fairly covered. So on the derivative side, where more of this competition will come in, the revenue share is obviously the revenue percentage is significantly lower. The number of customers who actively participate is also very low. So we obviously like this set of customers as well. And our offering here is very tactical. We keep on coming out with pricing schemes which benefit our customers. Just to name a couple of them, we have one scheme where customers, if they trade intraday derivatives, they can choose to pay brokerage only on the transaction they make money in. And for the transactions they make losses, they don't need to pay anything. So we keep on coming out with such tactical offerings rather than trying to reduce our brokerage for everyone. We are already, we operate out of not only our 200 branches, but we have access to 2,600 plus ICICI Bank branches as well. And it is a very symbiotic relationship. It is a mutually beneficial relationship because a bank also gets access to a high quality customer from us who is transacting, doing investments. And by the nature of this particular account, a lot of money generally lies in the bank account of the customer, waiting for an opportunity to get invested. So the bank earns CASA on that, which is a very core part of their business. So it is a very mutually beneficial relationship, and we are consistently able to get more and more numbers from these relationships. Out of 100%, 24% is being sold. So 76% they will keep on holding, and in 3 years maybe it will come down to 75%, which is a requirement. A bank looks at these kind of things. They have built businesses. They have come out with Lombard, ICICI Lombard IPO has come out. So once a business achieves a strategic size, they decide to kind of create value for their shareholders and also kind of go public. So over the last one and a half year, you will see that all these companies have got listed. And once the ICICI Securities also has become a sustainable and large business, it was time for them to kind of create value for the shareholders. So I think on the timing and the price, we are guided by our bankers who decide the time and the price of the issue.
ICICI Securities IPO తరాబోతుంతకు IPO ప్రాస్పెక్ట్స్ ఏంటి, ఈ IPO ద్వారా ఎలాంటి ఏ మేరకు ఎంత నిధులు కంపెనీ సమీకరించబోతుంది, రిటైల్ పార్టిసిపేషన్ ఎలా ఉందని కంపెనీ ఆలోచిస్తుంది, దానితో మార్కెట్ ప్రస్తుతం ఉన్న కండిషన్స్లో ఎలా టర్న్అవుట్ కాబోతున్న అంశాలు మనతో మాట్లాడేందుకు ఉన్నారు ICICI Securities నుంచి ప్రతినిధి. హలో సార్, ఫస్ట్ ఆఫ్ ఆల్ కంగ్రాచులేషన్స్ ఫర్ దిస్ ICICI Securities this thing, and how do you see the market conditions right now? As of now the Nifty cracked from 11,200 levels to now it's maybe it will be coming around below 10,000, and do you think is it the right time for this ICICI Securities to come at this point of time?
So I think the way we will look at this particular thing is look at the macros that we have seen. We have seen a strong tailwind on the macro side. We have an economy which is consistently on the growth with one of the top growth economies in the world. If you look at some of the other tailwinds where we can see the investment scenario itself, more and more investments are coming into equity from other asset classes here. So I think this is just the beginning in terms of the participations that we are seeing in the equity market, which are only likely to go up from here. On the market side, I would say is we have seen a fantastic year in the last say around 12-15 months, and we are in the middle of some consolidation in this particular market right now. And there clearly appears to be no reason why there should be too much of worry because equity markets by nature there will be some volatility involved, and the macro trends continues to be on the upside from here.
Now the brokerage business is facing stiff competition. Most of the agencies are coming into this field, and companies like Zerodha and all offering with rock bottom prices. How do you want to compete with them, and how different ICICI Securities in this juncture?
So, well, I said, if you break up the market into how the market turnover is, 92% of the market turnover comes from derivative segment, whereas only about 8% of the market turnover comes from the equity segment. We being a retail focused company, we are more in favor of equity percentage of our turnover is better than this particular number. Secondly, what customers today want, large customer segments come for participating in direct equity. What customer requires is guidance in terms of being able to invest in different companies. They want to research available on different companies, which we are able to provide them. We are able to handhold these customers into being able to use the platform. ICICI Direct offers a complete one view of their wealth. We offer not only equities, we offer products like mutual fund, life insurance, general insurance, corporate bonds, FDs, etc. So I think we have a complete bouquet of product. We are a full service brokerage house. We offer customer assistance of being able to place transactions. We offer them guidance on which stocks to buy, when to buy, etc. So I think we have a different business model altogether. And the discount brokerages has been part of the industry for a long time now. And while they have been here for, I think, 10 years and more, If you look at the revenue share, it has only consolidated in favor of the top 5 brokerage houses. So I think there is enough space, I think, for everyone to participate and grow.
Can you please throw some light on this ICICI Securities IPO, when it's going to start and when it's going to end, and some more details about the IPO proceeds?
So this is a offering which is being 24% has been offered by ICICI Bank. From 100% ownership, it is going to come down to 76% ownership by offering 24%. This IPO, the price band of the IPO is between 519 and 520. The IPO will be open from 22nd of March to 26th of March. There is a 5% reservation which is there for ICICI Bank shareholders.
Recent market condition, how do you see this as of now? And how about the retail participation, when it's going to recover? Any specific sector that you want to identify at this point of time?
So I think we've seen in the last 15 months or so, a lot of participation coming in from retail, coming in specifically through SIPs, etc. So the trend that we have seen, in fact, in the last 2 months when the markets have corrected a bit, that retail customers continue to participate in the market. They have been topping up their investments. We have been reaching out to them. They are topping up their investments they have already made in the last 12 months, 15 months, which I think is a very positive sign. We have also recommended that they continue with the SIPs that they have already committed for, because that is only a way how SIPs as a product will make money. So I think in terms of customer confidence, we are reassuring customers about the markets and the volatility that it has with it. And I think people in the flows that are appearing on the mutual fund side clearly indicate that people continue to participate.
Fine. Thank you so much, and I wish you all the very best.
Thank you very much.